Good afternoon, everyone. Thank you for joining us on this panel discussion, where we'll be focusing on digital payments and online acquirers in Nigeria. We'll be looking at the digital payment trends with a view to better understanding the competitive landscape and take rate evolution, also to understand the regulatory dynamics, the venture funding landscape, the dynamics around engineering talent, and finally, what the next frontier for digital payments in Nigeria is, particularly as technology and business models evolve and as they play out. We are pleased to be joined today by Muyiwa Asagba, the Divisional CEO of Interswitch Digital, and that is a division within the Interswitch group. Amandine Lobelle, the CEO and Head of Business Operations at Paystack. Akshay, the CEO of Cellulant, and finally, Chioma Nkechika, the CEO of CoralPay. We're pleased to have you all join us today, and we look forward to a very exciting discussion. I am Seun Onayiga, and I lead Renaissance Capital's West Africa investment banking and advisory business across products and service and sectors. So to kick off, my first question goes to everyone. Can you please very briefly tell the audience a little bit about your businesses and what market opportunity or problems you saw that you are looking to solve? I'll start with you, Chioma, and then we'll move on to Muyiwa, Amandine, and then Akshay.
Hi everyone. Good afternoon. Okay, it's a bit not specific when I say CoralPay is a payment facilitator and aggregator in the payment landscape. But essentially, what we set out to do was try and redefine payment standards in the reality of the African context. Prior to commencement of CoralPay, it's been more of foreign technology, foreign payment initiatives coming into the market as designed by the Western world. One of the things we realized that the whole effort to deepen payments in Africa has been limited to the opportunities and the infrastructure. So we actually set out to try and create that standard in the African context, primarily as a B2B, as a payment processor. And that's essentially where we build out to the full length of the ecosystem.
Thank you. Muyiwa, do you want to go next?
Okay, thanks. So we are a payment switching and technology company. We set out to solve payment challenges. We started off primarily in Nigeria, but over the past 17 plus 18 years or so, we have taken our solutions across Africa. And so now we have an Africa focus in looking at all of the payment challenges in Africa and being able to create value and wealth for Africans through what we do. Yeah. Thank you.
Thanks. Amandine, do you want to go next?
Hi, good afternoon, everyone. My name is Amandine. I'm the head of business at Paystack. We are a technology company that helps African businesses accept payments from their customers. So our mission is really to help African businesses grow their companies. And we think that by providing a very simple solution to accept payments from their customers that is affordable, that is reliable, is one of the best ways in which we can help businesses grow. We have an omni-channel checkout platform, so we help merchants accept payments, whether it's cards, bank transfers, USSD, QR codes. We were started five and a half years ago now, headquartered in Lagos. So in early 2016, headquartered in Lagos. And I think we've made a lot of progress in the last few years. We were the first Nigerian startup to get into Y Combinator. And earlier this year, we were acquired by Stripe, the US-based global payments platform. But very nice to meet you all and looking forward to the discussion.
Thank you, Amandine. Akshay?
Hi, everyone. Akshay Grover, CEO for Cellulant. We are a Pan-African payment service provider. We are now in 33 countries, out of which in 17 we are actually physically present, have an office. In many of these we have licenses. We have aggregated now probably more than 150 payment methods across the continent. We process payments for merchants, but increasingly how we differentiate ourselves is we are sitting between banks on the one side and merchants on the other. So we're deeply integrated both on the banking side as well as on the merchant side. And we see that as a key differentiator for ourselves as a business. finally, we are focused on both the online space, which is online checkout, payment processing, payouts, etc., but also very heavily addressing now the offline checkout space across a bunch of our footprint markets: Nigeria, Kenya, Uganda, Ghana, Tanzania, Zambia, etc. As a business, we actually have a long history, but our business model has evolved over the last 15 odd years. We are backed by TPG and by a fintech specialist investor called Velocity Capital. Happy to be here and meeting with all of you.
Thank you very much, everyone. So my first real question goes to both Muyiwa and Chioma. You both have been active players and are involved in businesses that have been key participants in digital payment evolution that Nigeria has experienced over the last 10, 15 years and continues to experience. Can you give us a quick overview of how the landscape has evolved over the last 10 years and what has driven its takeoff, particularly over the last 5 years? We'll start with you, Muyiwa, and then I'll come to you, Chioma.
Okay. I think over the past 10 years, I think we've started from evolving from a card ecosystem driven by ATM, POS, and web channels. And then that has evolved in the past maybe 5 years to not just card, but card and non-card. And with the introduction of the mobile channel that happened within the past maybe 5-6 years. And more recently, that mobile channel, I think, is evolving. And mobile has moved from mobile apps into USSD. And USSD is now a very dominant part of the evolution. In the past year or two, I think we've started to see financial inclusion and agency banking start to shape the way the ecosystem is evolving. But we've also seen a lot of dynamic entrepreneurs taking on challenges, creating new types of solutions, and we've also seen the impact of mobile telephony, particularly, what Google and Apple do with the Android and iOS store. It's really democratizing who can play and what they can play. And maybe lastly is the accelerator programs from big tech. It's really allowing our talent to start to come out and start to do really exciting things. So those are the things I think are evolving or have evolved the ecosystem in the past 10 years. I think the second part of your question, what has caused growth? Capital. There's a lot of capital flowing in now, and that's helping to fund growth. We're also seeing that the financial institutions in Nigeria, they are very, very competitive. They demand innovation excellence, and so that's really helping to drive what we are all doing. And maybe the last part is, interestingly, we think it's also the impact of CBN, the regulator. They are challenging us to be proactive, to be ahead of the curve, but at the same time trying to make sure that everything is secure and the right policies are in place. So I think that will be it from me. Yeah.
Thanks, Muyiwa. Chioma, any thoughts?
Okay. Thanks, Muyiwa. You've actually set the pace for my approach to the question. I think we should, in the Nigerian context, we should give credit to the central bank. Actually, in 2007, there was a deliberate attempt to refocus the dynamics for payment ecosystem. And with that, certain guidelines were brought into place, policies were brought into place, which has helped the interests of the general public. But more importantly, with the growth that has been created, there's been more awareness around the different parties within the ecosystem as to what they can do. Then, of course, the influx of capital has helped. But more importantly, and which is what Muyiwa touched on, if you look at the sequence, it was predominantly cards. Then at some point, there was the need for us to have a super processing platform with NIBs, which brought opportunity for a lot of technology to come into space. There was a platform for people to test out all their ideas. Now that brought about the whole telephony, the growth in the telecom sector, the need for people to be able to transact. And if you look at it in the 10 years and 5 years, there was a major change 5 years ago. What happened? It was a point that with the capital that has come in with the technology advancement, there were a lot of initiatives around people paying without needing their cards. So you begin to find things like token payment, you begin to find things like tokenization of different payment infrastructure. All of this culminated into development where you have the Y Combinator series, a lot of people who trained up coming in. But essentially, where that has brought us to is the foundation for which I want to recognize our context of Africa. What do we have working for us? Typically, if you look at the growth in cards, it was stunted. Why was it stunted? There was a distribution problem, which was typical of our demographic. But of course, the success of the telephony industry brought about people being able to make payments with mobile apps and USSD, which Muyiwa touched on. And those are the things I think have really evolved to grow that space. But more importantly, there's still quite a lot of initiatives in the play which are coming in, because now the ecosystem has been built up. There's loyalty. There is a lot of ideas around data protection, data enhancement. All of this has culminated in the success story of the payment ecosystem.
Excellent, super. Thanks a lot, Chioma and Muyiwa. And very good points you all articulate. But I'll just write off the very last key points you made and with respect to the role the regulator has played in all of this. We've seen the payment space face tremendous central bank regulation, over time, and payment service companies, have seen an increase in this regard more recently. Now, the regulatory risks seem to be on the rise in the broader payment and fintech ecosystem. I'll come to you, Akshay. You have a very interesting background and have worked in several frontier and emerging markets. How do you think about this regulatory dynamics? And how do you think about them vis-a-vis your experience in how they have also panned out in other markets?
Yeah, I would say, when I think about a couple of geographies in my mind, South Asia, particularly India, you look at this side of the world, the Middle East and Africa as a continent, because Africa itself is broken down into so many different parts, but I'm not getting into each country for the moment. But when I think about that, I would say India probably top of the stack on regulation, but a very strong follower to that would be Africa, and Middle East would fall far behind. And if you think about that, I actually think that African regulators have been quite progressive, across the board in general. As a fintech industry, as we process more payments, we do remittances, we do consumer loans, it's unfair for this industry to expect that there will be no regulation. In fact, some regulation is important so that there is a balance between, let's call it, the good actors and the bad actors, which are always there in an industry. And I think that's very important. And I think that in general, I would say regulators have been very forthcoming, at least my experience, across all the markets in Ghana, Tanzania. These are all places where we've gone in and acquired licenses. We've actually had conversations with regulators, and we've realized that a lot of them may not be fully up to speed on the thinking, but when you talk to them with logic, with answers, with parallel examples, they are very keenly listening to you, and they're very open to invest time and effort in understanding your viewpoint. So that's been my experience, across the board in Africa.
Thanks. No doubts the regulators have a tough job to do, and sometimes they don't necessarily align with the desires of the operators. But thanks for those thoughts, Akshay. Amandine, I'm going to come to you now. You're an executive at Paystack, an entity that is basically looking to solve payment problems for businesses, particularly small and medium scale businesses across Africa, by enabling them accept payments digitally, at least at the heart of it. Paystack is probably a lot more than that, but at the heart of it. How do you estimate the size of Nigeria's cash economy to be? And what percentage would you say has been digitized so far? or put it differently, what percentage of transactions in the Nigerian economy do you estimate are happening digitally as opposed to in normal analog cash form?
Yeah, no, it's a good question. I think, as we all know, cash still plays a very large role in the Nigerian economy. I think there's still a lot of informal activity that happens in Nigeria, and it's very hard to quantify just exactly how large that is. I think one thing that I always remember is I was sitting on a panel 5 years ago with someone from Visa, and someone asked them who their biggest competitor was, and the answer was not MasterCard. The answer was cash, right? So there's still definitely this knowledge and just this reality that cash is incredibly prevalent. I personally have not done statistical analyses to see what it represents in terms of the whole economy, but I know that some have tried to put a figure to it. The Gates Foundation, I think, says 95% of the volume of transactions, not necessarily the value, because of course, a lot of cash transactions can be quite small, but in terms of volume, some estimate that it's still up to 95% of the volume that happens in cash. That said, I do think that there has been a massive move towards digitization. And part of that is also because it's just a lot easier to accept digital payments. So if I think of Paystack and our journey, what we process on a monthly basis today is more than 8 times what Nigeria as a country was processing on a monthly basis when we started the company in 2016. So that's a massive exponential increase already. Just the entire country was processing less than 8 times more than what we are processing today as a single company. And I think part of that was also a lot of education around people were paying online with their cards for the first time. You've also seen a lot of innovation. Someone was talking about the types of innovation that we've seen in payments, but even just beyond card, NIP, bank-to-bank transfers in Nigeria. I think Nigeria is one of 5 countries in the world where you have instant bank-to-bank transfers. That's a massive innovation that has happened in Nigeria in the last few years that was spearheaded by NIBS. And then more recently, if we look at COVID and what has happened, that was also another catalyst for innovation. So just us, again, we saw our signups increase 5x in 3 months because of COVID, and because we made it very, very easy for people to accept payments online. If you think about it, if you are restricted to cash, you can only do business face-to-face with your customer, probably from 9 to 5. But as soon as you switch your business online, you can accept payments anywhere from anyone at any time. You're basically doing business 24/7. And so that's obviously got a massive benefit to African merchants. So I think we are seeing a lot of that digitization. That doesn't mean that cash is going to go away tomorrow. But yeah, it's an exciting time to be part of payments in Nigeria.
Super interesting thoughts there. And for my next question, I'm going to stay with you, Amandine, but I'll also bring Muyiwa into the conversation. Now, riding off the back of some of the things you just mentioned, Amandine, from where we are today, because whatever that figure is, whether it's 95%, 80%, there's still a huge opportunity right there, and a lot of work that needs to be done in digitizing the exchange of value between people. From where we are today, what would you say is required to get digital payments in Nigeria to the next level, and what do you reckon are the main impediments or hindrances to us getting there? We'll start with you, Amandine, and then we'll move over to Muyiwa.
What do I think is needed to get payments to the next level? I think that there are a few things. There are a few pain points, and these are things that we've tried to address one by one. I think the first thing is just to make it as easy as possible to get started, right? If it takes someone 3 weeks to try to integrate and to try to sign up and start accepting digital payments, they're going to abandon, they're going to lose heart. So I think one of the things that we tried to do was to make it as easy as possible for anyone, even if you are not a developer, even if you are not a technical person. We actually launched something called Paystack Commerce, which is basically e-commerce in a box. Just upload photos the way you would on an Instagram account, but automatically start accepting payments. So I think that's one aspect of it, is just trying to make it as easy as possible to get started. And that means onboarding, KYC, easy plugins, all of that. I think the second thing is probably on the pricing side. And I know you mentioned at the beginning, Seun, that we'll talk about take rates eventually, but it also needs to make sense for merchants to accept payments, right? If it's going to cost them 20% of the transaction to accept digital payments, it's just cheaper to use cash. So I think pricing is something that has to be taken into consideration. And then I think the third thing is just reliability and security. I think the most important responsibility of a payments company is to make sure that payments are reliable and payments are secure, that there's no fraud going through your platform, and that if a customer is trying to pay, that payment will go through. And for a very long time, it was something that needed to be changed in the psyche, that if I pay online, it's actually going to reach my destination as intended. I think that's still something that is very important for all of us as payment companies to get right. And we have a massive responsibility to reinforce that, which will in turn increase digital payments.
Thanks, Amandine. Muyiwa?
Yeah, I think I'll just add, I agree completely with Amandine, and I'll just add to what she said. I think because it's a really broad question, how do we really get to the next level? I think the big thing we probably also have to add is collaboration. We are so many players, we all have to compete, so we have to collaborate and compete, end up competition. But the opportunities are so large, I don't think any one entity or any one company can take it on themselves. For us to be able to innovate quickly, take on the biggest problems, and there are quite a number of them, we need to collaborate. But I just try and explain that a bit. In Interswitch, we have this thing where we say we have a live and let live strategy. And so we create solutions, we create services, and we allow others to use these rails to build their own businesses. Yeah. And so if I just use a similar example, if your specialty is in, say, blockchain, we want you to be able to look at us or look at other players and be able to use their rails to make your own business something bigger. Yeah. And so in summary, I think if we look at collaboration from the point of view of all of us coming together, taking each other's strengths, I think we'll be able to really take everything to that next level. So that's a big thing I think I'll add to what Amandine has just said.
Akshay, do you want to add something?
Yeah, I was just going to say, I think I fully agree with all the points that Amandine and Muyiwa made, but I think I'd add one more element there, and that is development of the ecosystem. And what do I mean by that? Because it's payment ecosystem, but it's a lot beyond payment ecosystem. Let me take an example to illustrate some of those things. So, for example, somebody talked about e-commerce in a box. The question is, there are today, when you go to Indonesia or when you go to Asia Pacific, you find homegrown Shopify's very strongly prevalent over there, right? And they don't necessarily specialize on payments, but they specialize on how to take your business online. And I don't want to comment on anybody's product, but I would imagine that if you focused as a business only on taking a business online, right, that is different from when you offer it as a value-add service as a payment company. Because then your core business is still payments. It's not taking a business online. It is, but it's not entirely, right? So when you find that the ecosystem develops, there are network effects which benefit even the payment businesses. And to me, I feel like the more we have this interaction between the network and the payment businesses, that's one clear way that the direction can improve and be significantly better.
Excellent. All very interesting thoughts there, and I agree with all the points all the participants have made. And I think what the point you make actually is quite critical. If the more people we can get online, the better it is for the entire ecosystem. So I'll move on to you, Akshay and Chioma, but I'll start with Chioma for my next question. You both operate in slightly different segments of the ecosystem. And where along the value chain do you expect the most value to be captured as we go through the cash to digital transition in Nigeria? Will it be on the acquiring side? Will it be on the issuing segment? Will it be processing, switching, terminal ownership? What are your thoughts?
Thank you. It's interesting you trying to put it in a box, but I wouldn't, because if you take payment, there are so many components to a successful payment process. For every transaction issued, it has to be acquired. For either of them, it has to be processed. So they kind of all go hand in hand. What I think is more important, if you're trying to look at what would be the key focus, it's actually the framework, which is what I hear everybody speak to when they talk about the ecosystem. I will take a typical situation we have in Nigeria today, if that will kind of put it in context. Today, there's this excitement about agency banking. Everybody is talking about it, but nobody is seeing the problem we have created. The numbers look good, the turnover looks good, revenue is coming, but we have all worked counterproductive to the objective of a cashless society. So, what should we do? If you take a typical dynamics, the process flow, the person who has gone to the agency banking location to do a transaction typically went there with one of the existing tools, either a card, the phone, or access to the account. You imagine, what is that person doing with that cash that he or she has gone to transact on, either for the paying process or for the withdrawal in the case of the cash in, cash out? Because the reality is most of those locations do not do much of the other services designed around agency banking. So you now go back and understand that for you to focus on where do you expect growth, you want to build out the ecosystem so that the representation of all the channels that make a successful payment are well represented and really promoted. That is where I come in to say it is not about choosing one over the other, but the full spectrum to be sure that it is fully integrated. I know I might not sound politically correct because it will look like you're taking revenue away from a segment of the market. But the truth about it is there is opportunity for all of those players to evolve from all of that cash-laden process to a cashless process and still provide service. So nothing says, like Akshay was speaking to, nothing says if you live in Ogbomoso, you are a provider of terminal services to all the shops around Ogbomoso. You earn money as a terminal owner, you earn money as the infrastructure provider. So there's opportunity for everyone. So if we really define payments, let's first of all, as a group, as an entity, what is our objective? The lady spoke about the need for us to say, build out end to end. When you're building out end to end, who are the key players you need to enable? Those are things that we need to focus on. But for me personally, I would say build out full spectrum and let everybody find the niche and the value they can provide to the process.
Excellent. Thanks a lot, Chioma. Akshay?
So Seun, unfortunately, I don't know if Chioma has disappointed you, but I might disappoint you even more because I'm not going to answer the question which you asked, because the answer, I kind of agree with Chioma, and maybe I'll say it in slightly different words, but it's the same thing. I think the guy who creates value or takes value in the chain is who solves the customer problem. And whether that means the entire ecosystem of what you're talking about, acquiring, terminal, no terminal, whatever, doesn't really matter. That is a means to the solution which you are offering the customer. If you solve a customer problem, you will take the bulk of the value in that ecosystem. That is how we are looking at payments when I look at all the markets. And let me illustrate a small example to you. We were in Lagos, you walk into one of the, and I'm not going to name the store because that would be unfair, but You walk into an electronic store where typically you would have a large transaction volume value to buy a television or a consumer durable, whatever, and you say, okay, what are the payment options? If I don't want to pay by credit card, and you say, I want to pay by bank, it says, yeah, you can pay by bank. Go to your banking application, enter this code, and make the payment. And then the guy at the counter will be calling his finance person. Have you received the credit? Have you received the credit? For 10 minutes, he'll make you wait. After some time, he'll come back and say, yeah, the money has been received. Now you can go. Yeah, after 10 minutes. Now, you see this all the time. Either I've got to have that much cash in my wallet to give to this guy, or I've got to have a credit card, or I have to wait at the checkout counter for 10 or 15 minutes until the finance person can confirm to this guy that the bank payment has come.
Yeah.
So the question is, do you solve that problem? We went with a solution to solve that problem. We said we can give you instant notification once the credit happens at the checkout counter. And every retailer we know is signing up on the product we don't even have 30 minutes of sell time to any retailer in Lagos to deploy this product. Why? Because it's solving a customer problem. So I think, I guess I'm just illustrating the point that I was trying to make earlier, that the value lies in problem solving, not in a particular aspect of the transaction.
Super, excellent thoughts. So if I hear you all correctly, and to put it in different words, it's really about solving the problems of the customers. And the more customers you can solve their problem, essentially increasing the pie, the better it is for everyone. And then everyone gets the benefit from it. I'll take a slight pivot to a different segment of questions. And I'll start with Amandine. Since the beginning of 2019, Nigerian startups and early stage businesses have raised well over, $1.7 billion is the last figure I put that at. Fintechs have clearly led the charge with well over $1 billion raised, with payments being one of the most active areas in attracting funding. We've also seen some exits happen, none more notable and exciting than Stripe's acquisition of Paystack, which you, Amandine, were one of the key actors in driving that. So for my next question, which is a two-part question, I'm going to start with you, and I'd like to get the thoughts of everyone on the panel. And it's, how do you assess the barriers to entry within the payment segment? And now that a lot of money has been raised by a decent amount of actors, how do you see the competitive landscape evolving from here going forward, including from the banks? And we've heard it from a few of them today in earlier panels, who are now looking to get more active within that space.
Yeah. On your first question, so what do I see as the biggest barriers to entry? I think probably the biggest one has got to be regulatory. It's because, as we've all already mentioned, this is a highly regulated space. Yes, anyone can start a fintech business tomorrow, but at some stage you're going to need to start thinking about regulation. And when I think about capital, fintech companies are actually pretty lean and efficient. They're not very CapEx intensive. When we had to close our office, it was actually very easy for us to go to remote work because everything sits in the cloud. So it's not a very CapEx intensive business per se. That said, there are a lot of capital requirements when it comes to regulatory needs. So I think as much as there's a massive entrepreneurship and a great ecosystem in Nigeria, as soon as some of these burgeoning fintechs start gaining scale and growing, the licensing aspect is probably going to be the biggest thing that needs to be taken care of, and that can be quite expensive depending on which vertical you're in. As we know, fintech is all encompassing, and just in Nigeria, there are dozens of companies, whether it's savings or investments or payments or insurance. And so each of them have their own different regulatory requirements. But payments, there's been a lot of changes in the regulatory environment in payments, as you mentioned, in the last couple of years. And some of that comes with very hefty capital requirements. So I think that's probably got to be the biggest one, and maybe why a lot of capital is pouring in, because startups do need to raise money in order to meet those capital requirements. So I think that would be the biggest one, because it's not for lack of entrepreneurial hustle by far. I think Nigerians are probably the most entrepreneurial I've met in my life. So it's definitely not for lack of energy or ideas. So I think that's probably got to be the biggest physical barrier. And the second part of your question, Seun, was around
the competitive landscape. Lots of cash and monies have been raised. How do you see that evolving, especially from, say, the banks as well, who are traditional and who are taking a keen interest in the space?
Yeah, to be honest, I think there's still a lot of value to be created. I think we are still just scratching the surface when it comes to fintech or payments in Nigeria. And I think we'll see more new entrants pop up. And it's actually a good thing, because this isn't a one player takes all market. We all have our role to play in advancing digital payments on the continent. And I think it's actually good. Muyiwa talked about collaboration. I don't actually see, the others on this panel as like competitors. We're all in the same market, and we're all trying to, make things a little bit smoother and more efficient in terms of accepting payments online in Nigeria. So, summary to your question, I think we will continue to see new entrants, whether it's fintechs across multiple different verticals, or the banks, as you mentioned. There are some banks that have very publicly said that they are restructuring into certain holdcos so that they can also themselves play the payments game. And yeah, let's see where that goes.
Excellent. Maybe we should move on to Muyiwa to get your thoughts on this topic.
Yeah, I think I'll take the second part, concerning the banks. Yeah. The fact is, they are a foundational part of payments. They are just inevitable. So if they want to start playing actively, you can't say they shouldn't. They are gonna play. And the exciting thing about them really is when they play a different kind of game more often than not. They're, like I mentioned earlier, they're really very demanding, and they're very, very competitive against each other. And so that helps to bring the bar up as to what all of us as players need to do. Yeah. So I think, when they start to play more actively, as they set up their holdcos and set up their own fintech entities and so on, it's all going to get quite exciting. And we'll all have to just turn it up a bit, turn up the notch a bit more, yeah, to play here. Yeah. So that's it from me.
Thanks. Chioma, any thoughts?
Yes, hi, thanks. Certainly, I've actually taken quite some notes. And I'll start with Amandine's input. I quite agree with her, but we're very or maybe ask for clarification when she says the regulatory perspective as a barrier. In my school of thought, I actually will see it as an opportunity. And the reason is quite simple. The person who is bringing in funds wants to be sure they are deploying their funds in a regulated context where there's safety. However, the limit to that regulation, what we often ask for is let it be consistent so that you would have done your risk analysis, understood what you're investing into, and then run the hub. But aside from that, another key requirement when it comes to the issue of investment is what does the investor require? One of the things we've seen in the market today is, and from my perspective, a lot of players who just think, oh, Paystack has raised this money, me too, I want to raise. You don't have to raise because Paystack has raised money. Paystack has done the work. Paystack has put in structures which has attracted investors. That's why they found them worthy to invest in them. Pardon me if I'm using Paystack, but the whole essence here is because Paystack has done it doesn't mean everybody must do it. So the whole buzz around funds flowing in is exciting. But the next question to is, why are you raising funds? Are you raising it just because you want to build up and sell? Or you want to raise because you're building out your infrastructure organically with a long-term, or you want to expand? Those are things that are coming. But when it comes to the context of the industry as a whole, I'm quite happy to say on this panel today, I think we have a relationship now, speaking to CoralPay. We set out as an infrastructure provider, a B2B. So we work with people who deal with customers. Now, when it comes to the context of investment, our focus is let us grow our infrastructure to be able to support our clients. So if you put that back into the context of what you see going forward with the funds being raised, I think the point to me is, let us not just go with the excitement of raising funds because we want to raise funds, but raise funds particularly because of what we want to achieve with it. That's my take.
Akshay?
I think my colleagues have covered it quite well. So I just have one small point to comment or to maybe elaborate on, which is that, I think that, you see, being an entrepreneur is not always about working hard, it's about working smart. So the question again comes back to a very simple thing. What is the problem you're trying to solve? Is that a problem which your competitors are not solving? And if the roadblock, for example, is a license, right? Frankly, I know so many companies today who don't have the license themselves, but are in exactly the business that a licensed player should be doing. Why? Because they have a commercial, no, not because they're breaking the law, don't get me wrong. Because they're going and partnering with a guy who has a license and solving the customer's problem. So yes, they are sacrificing margin, but because they are more nimble, because they have a better product, because they are actually solving a customer problem, they are becoming more successful than the guy who actually has the license himself. So does having a license guarantee you success? Answer is no. License enables you to do certain activities. Yes, it is a competitive advantage. It can be a bit of a barrier to entry, but it is not the end of the world.
Super. Thanks, everyone. Look, I think you've done justice to that question, and I think all the points made make quite a lot of sense when we put them in perspective. I'm quite mindful of time, so I'll just try and run through some of the other questions that I have left for the panelists. And I want to dive a little bit more into that competitive landscape. Nigeria's take rates are known to be one of the lowest across the continent. Some say they range between 3 to 5% or thereabouts. Now, if I start with
3 is very attractive. If you get 3, I would say
Nigeria,
right now my shareholders would be very excited if I told them 3%.
Maybe we should start with you. Actually, I was going to have Muyiwa start this off.
I'm sorry. I'm so sorry.
But maybe we should start.
React to that one.
Maybe we should start with you. What are the take rates in the offline and online acquiring space in Nigeria? And then maybe Muyiwa, I'll have you just give some color as to how this has evolved over time, and where do we see these going to over the next few years?
Look, I think the segments are all different. So there's not one rate but you're right. On international cards, maybe you could get to 3%. On domestic local currency cards, you will probably be at 1%.
0.5, 1%, yeah.
On bank transfers, you might be at 0.5, 0.7%. So the take rates are definitely low in Nigeria when I look at Nigeria from a Pan-African context. Yeah. The one country where I find, but at the end of the day, I find that's an indication of either the potential of the volume or the actual volume, right? Let me give an illustrative example in Africa. Kenya, the blended take rate, Kenya is $100 billion GDP, so we're much smaller than Nigeria. But Safaricom in 2020 did on their platform $65 billion of mobile money transaction. Yeah. On the $65 billion, can you guess what the average blended take rate is? It's 0.28%. Yeah. Now, so the question is, the more volume you drive, is your take rate going to dive? It has to dive, because I don't know if you noticed, Amandine made a comment about it, that imagine a retailer who makes 10% margin. His gross margin is 10%. Now, if you as a payments company come to him and say, I will charge you 2%, is he going to give 20% of his business profit to you because you are doing a simple thing like processing a payment for this guy? He's never going to do that, right? So he'll keep on taking cash. So if you want to move this guy to digital, your take rate has to be 0.3%. Then he will transact with you. And then you will get the volume that he brings to the table, right? I'll give you another example. Do you know what the take rate in India is, merchant discount rate in India now? 0.
Close to 0. Yep.
It is 0. It's exactly 0. And fintechs are being pushed to say, what is my business model now? Because there is no merchant discount rate. There is a unified interchange. So I think people need to be cognizant that when you want to drive that kind of volume, you have to be ready to sacrifice take rate. That's kind of my take on it.
Thanks, Akshay. I don't know if anyone else wants to add anything to it, to the point Akshay made. Chioma, do you want to go ahead?
Yes, more like a question for Akshay. I like the perspective and I hear what he's saying, but one challenge I've had, and it's cut across the industry, in a country like Nigeria, where the cost of providing service is shooting high, regulation is fixing prices, there's competition in the market. How do you expect fintechs to survive? Because one of the things I've heard people preach, I don't deal with the consumer directly. I deal with other businesses who deal with consumers. They often come back to us to ask, at this price, we will not be able to serve our customers. Let's come down on your pricing. But then because we are regulated, every take we collect, we have to share based on a guide to bank charges. How do we reconcile all of this? Maybe perspective from my panelists to help my colleagues.
I don't want to be the only one speaking, so I'm happy to offer the mic to others and I can chip in at the end, but I do have a view on it.
Muyiwa, Amandine, do you want to share thoughts, comments? You're on mute, Muyiwa.
Yeah, you know, when Chioma started, he said the question was for Akshay, so I was actually looking forward to hear it from.
Okay. No, look, no. So my simple answer there to you, Chioma, to be honest, is that you see, necessity is the mother of invention. Only when you're pushed against the wall do you invent your business model. But I also said another thing. So I think I'll give you an example. In places like in India, where the merchant discount rate has gone to 0, people are now earning off merchant lending. People are now earning off merchant investing. So whichever merchant has surplus cash, they're investing for those merchants. People are now earning off data analysis of their merchants, right? So I think business models evolve, right? I'm not saying that evolution can happen like overnight. It will never be like that, right? So some pain will happen, some not so good things will happen. The ecosystem has to cooperate. Regulation has to cooperate. For example, I talked about take rates, right? But fact of matter is, I can't drop my take rate as a service provider today. Why? Because my mobile money operator is not willing to reduce his payment method cost. Now, you go and talk to a mobile operator 20 times every month and say, guys, I'll give you 10 times the more volume. They don't understand that. They want to maintain the rate. So what do? So that's what I said. The ecosystem has to also come together. There's no straight answer. I don't have an answer to your question, but I'm just kind of trying to illustrate the nuances here, which can drive in that direction.
Thanks, Akshay.
Let me just, I don't disagree. Okay,
No, go ahead, Muyiwa.
Okay. Now, I just wanted to give a bit of color of the evolution, to the evolution. When we set the fees many years ago, I think we kind of dictated what the fees are to a large extent now. There wasn't that much POS or web MSC transactions a very long time ago. And when we started, we were trying to make it competitive because of the international scheme. So we actually brought the price much lower to generate adoption to a large extent. And what we've seen is over time is that lower price is where we've kind of had to keep it. We can't go higher, and every now and then it tends to even go lower. Now, whether it will get to zero, now I don't know. I don't want to. That's a very difficult place to get to. I don't want to speculate on that.
Just so we're mindful of time, I know we've got about 10 minutes left, and I want to just pivot to a few other questions that are quite topical. Okay. And maybe I'll start with Chioma and then get Amandine's thoughts on this. Competition for engineering talents is one of the themes that we keep hearing has become one of the key challenges facing the tech ecosystem in Nigeria. Can you help us understand how big of a challenge this really is and how you're managing to navigate this dynamic? Chioma, do you want to start, and then I'll move on to Amandine?
It is a big challenge. It is a thorn in the flesh. And the reasons are very simple. It comes from the bigger macroeconomic situation we see. And it's not so peculiar to Nigeria or Africa, but it's more. And the reason is quite the fact that the currency, the security situation, the end-SARS experience, and of course, the evolution. A lot of our talents, like Amandine mentioned, there's so much talent. I operate a mini sandbox system where I welcome people to bring their ideas, test with us if it works well, before we even start asking them if they have regulatory. But one of the challenges they've had is challenge of getting the desired revenue for what they want. But because so much capital is chasing Africa, the new frontier, for investment, for payment experiences, you find that these people, having learned from our experience, are able to come up with innovations. They don't have where to test it out. They don't have where to deploy it. And what they then do is then make themselves available for foreign expertise or foreign experiences. And what we face today is this. Well, let me put it how we've managed it better. So when we set out as CoralPay, we actually created an environment where you can work from home, looking at the challenge of commuting in Nigeria, in Lagos, and all of it. So that helped us first. And we also encourage people that you can do a second job. However, so long as there is no conflict, then it's fine. And that has helped us build confidence with our team. So I haven't personally had much of what we call people leaving, but what we found is that, yes, you can do a second job and you can manage that experience. It's my style. I don't know how it works for everyone. So we are working remotely and we've tried to manage it. But the truth is, the average good guy has offers on his table. And if you don't build a relationship with them, if you don't give them interest to see that they are part of the organization, they will readily just walk away. But if you give them that opportunity that they can meet their needs and all of it, is well and good. So today we have people working for us from all over the world. That has helped us keep operations going and build stability in the infrastructure. And that's how I have managed. But the fact that it's a problem, it's a big problem, because even banks have suffered it, where a whole department within a span of 2 weeks just drop their papers and they're off. And there are so many countries welcoming everyone.
Thanks, Chioma. Amandine?
Yeah, I agree. I think it's just a massive thing that everyone is conscious of. I think Paystack in particular, we are over 50% of our employees are engineers or product managers. So we are highly technical as a technology company. But of course, our ambitions are massive. And so you're really going to be constrained by the number of people that you have that can actually help you build that. And yes, there's a big commercial and business and growth perspective as well. Marketing, sales, finance, everyone plays a role. But if we think about who's actually going to be building the technology, who's going to be building the product, there's a massive premium on engineers. I think one thing that has helped us is that we've always been very remote friendly. And now post-COVID, we are remote first. We are also, even though we were headquartered in Nigeria, we're a Pan-African company. So we actually now have employees in, I think, probably 12 different countries. And for engineers, we have engineers in East Africa, we have engineers in South Africa, Nigeria, we have an engineering hub in Dubai even. So the rule that we have internally is plus or minus 3 hours from Lagos time zone is fair game. And we've made it very easy for anyone that aligns with our mission and what we're trying to build on the continent to join us on this journey. So Chioma, you mentioned you have people worldwide. I don't know how you work through the logistics of time zone. We've tried to constrain it to plus or minus 3 hours. So basically Europe, Middle East and Africa is fair game. But beyond that, just to echo what Chioma was saying, I think it's also very important to give engineering talent autonomy, responsibility, and feel like they are really part of the mission. So I think one thing that we've tried to do at Paystack is be very intentional about the culture that we are building, and really give people, even if they are very junior, I think the average age of Paystack is maybe 30 years old, give people the feeling that they are really part of something much bigger than themselves, and that what we are building is truly going to stand this test of time. And I think that makes it pretty robust to defend the engineers that you already have within your company.
Excellent. Thanks, Chioma and Amandine. So we've come towards the end of the program, but I have one more question that I'd like to get the thoughts of the team on. And I'll probably leave this question with Muyiwa and Akshay. What are your thoughts on regional Pan-African intercontinental expansion? So for those of you who have been able to scale out of Nigeria, and I believe everyone, perhaps apart from CoralPay, has, how have your experiences been, and how do the other markets differ from your experience in Nigeria? So perhaps Muyiwa, you want to go first, and then we'll wrap up with Akshay.
Okay. I think every market has its own nuances, has the socioeconomic factors that affect it. What that means, I mean, my absolute first-hand experience, I had to run our business in Uganda for a couple of years. And what that means is that, I mean, a lot of your success in one market, you can't copy and paste it in another market. The nuances are just too strong for that to happen. And so what we've seen is from the years that we have been doing this is that we have to, first of all, look at local talents, try and get good local talent so that you can get the real insights, get the true insights of what the market needs. And then the other part of it is having a very open mindset. So allowing that local talent to be able to dictate, what the direction should be. And then maybe the third part is just having a bit of patience. It's going to take a bit of time to get the right mix together. I think when we started doing all of these things, then we started seeing the kind of results that drive scale. Yeah, so that's what we've seen, and that's what has been our experience.
And finally, Akshay, what are your thoughts?
Yeah, I mean, I think on that one, I would say firstly that I would concur with everything that Muyiwa said on the fact that every market is a different market. You can't treat it with a similarity. Sometimes there are similarities in regions. You will find that that there are some advantages of a particular block, right? But I think more broadly, I find that being Pan-African or across a group of countries makes your business a lot more defensible and a lot more, a lot less risky, because no single market then determines how your business performs. And that's a very important element, because there will be times when currencies fluctuate, there will be times when there will be political instability, and when you have 50% or 70% of your revenues coming out of one country, right, and suddenly somebody says now from tomorrow morning foreign exchange is shut down, some of these things have a material impact, and so consciously we've steered away from that. Today I can proudly say that I think the highest contribution of any country is 30% in our business. And we are aiming that by 2024, no market will have more than 15% concentration in our concentration of revenues in our business. So that's the direction we are headed in. And we are also leveraging this with your previous question, Sean, which is around talent availability. So we're trying to build a pool of technology talent across the markets. The team is central in Kenya, right? But the team is in a way physically distributed. So it's a lot easier to find the top 5 engineers in Zimbabwe than it is to find the top 5 engineers in Nigeria. And chances are very high that you would get the same quality at probably a lower cost in Zimbabwe than you will in Nigeria. And that's what COVID has taught us, right? So we are actually moving towards a distributed technology team across the footprint in Africa.
Super. Excellent. And on that note, I'd like to say a very big thank you to all our panelists, Chioma, Amandine, Muyiwa, and Akshay. It's been a real pleasure having you join us on this our inaugural Tech/Fintech conference. Thank you for your contributing to what I would describe as a very engaging session. I found the discussions very interesting, and I'm certain that everyone who was watching thought the same. I wish you all continued success in your various business endeavors, and we look forward to hearing more exciting stories from you all. To everyone watching, thank you for joining us on this panel. We hope you enjoyed it. Join us once again in another few minutes for our next panel discussion with digital logistic players. Good afternoon, everyone.
Thank you very much. Thank you, guys. Thank you.
Thank you. Have a good
Pleasure
day.
to meet you.